Good day all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, February 10th, 2025. Well, we had the Super Bowl yesterday. I was very disappointed, not in who won. I was disappointed in the game. Either team that won, for me, was just fine. But I was disappointed in Kansas City's performance, no question about it. And I think they were disappointed. But the Eagles finally got it. So let's applaud it. Good for them. I'm worn out today, as I'm sure many people were. You know, Monday, day after Super Bowl, is typically the most day. It's the day where most people call in sick of the whole year. Did you know that? I didn't. You're going to have some weather concerns coming up in the middle of the week. Chicago's due for 6 to 8 inches of snow. They're saying possibly in the city getting that, and then another storm right behind it. What we get, remember, it starts moving east. The cold is here as well, so you got to think these things out if you're trading in the energy markets. Let's take a look before I get into the daily commentary that I have with what you have coming out in the morning. National Federation of Independent Business is going to come out with their January business index number at 5 in the morning. Red Book Group comes out with weekly retail sales at 7:55. At 9 o'clock, Fed Chair Powell will take his seat in front of the Senate Banking Committee. You know it's televised. It's going to occupy a lot of time. There'll be a lot of questions to drill him. We'll see where that's going to carry. You're going to find out before the 8 and the 17-week T-bills, how much they're going to try to auction and where it comes from. U.S. grain supply-demand report, world and domestic. You'll get that at 11. I don't think this will be a real big report in terms of reaction. I don't know, but I don't think it will be. And President Trump, this is big news, did sign 25% tariffs on steel and aluminum at this time with no exceptions, and it includes finished products, which was a hole that was on this before. In other words, I'm sending you a finished product of XYZ metal or whatever it is. He's put an end to all that. So we will see what this does. He's already saying that maybe Australia could get an exemption down the road, but Canada, Mexico, they're included. In other words, 25% tariff immediately on them. Now, you know this is inflationary. Do not buy into the argument, please, that it's not inflationary. It's inflationary. The president thinks that the money that's collected in the tariffs will be used in one way to get the SALT deductions and other tax breaks he wants to get through, and that ultimately you either produce and build factories in the States or consumers will pay the higher price. And because it's a raw material in many of these cases, like in a car price, on average, it maybe makes up the aluminum and the steel, 10% of it. So it goes up, how much of that they can pass on, half, 5% on the car, and the manufacturers can eat the half. Those are the stories you're going to hear. Do I buy into them? I don't. But those are the stories you're going to hear. The gold market's getting a bid off of that because it is inflationary, and the gold traders are going to swarm on that. I don't know what to tell you is going to happen right here with Bitcoin, because you're seeing pressure come on the stock market early on because of these tariffs. So we'll see what happens there. The deal between Israel and Hamas on the verge of falling apart because Hamas is backing out of the deal. They're claiming Israel is breaking the treaty in numerous ways. We will see. President Trump said on that, if the hostages that were to be delivered are not delivered by noon on Saturday, the pressure from the United States on Israel is off. They can do whatever they want. He is not going to tell or use U.S. pressure to keep and get Israel to the negotiating table. So now they've got about 5 days to figure this out before God knows what happens there. So that's where you're at on everything at this point. So let's go to the chart action and see what we've got and take it from there. I have the chart in green because as long as you close over the 18-week average of closes, and this is a close-only chart, the bias of the market is up. For the week, including tonight's early trade, you're up 0.43%. When you take a look here, you see distribution in this market. You're seeing waves to the downside. The market snaps back, but overall, the the pattern isn't making higher highs. You can see when I put on the swing line, you've got lower highs and lower lows at this point. That changes like that if the market gets up and over 61, 23, 25. But until that happens, the swing line is saying, hey, you're in a downtrend at this point, and the battleground is crystal clear. It has been and it continues to be the red line, which is the 18-day average of closes. The green is the 100-day moving average of closes. So that's your lower support number. And the Bollinger Band all of a sudden has joined the 100. So together, that 59.90 level, very important zone in the market on the way down if the market breaks to that level. Momentum-wise, it's pointing down. So we have the market at this point, the trend down. The bias right now is about neutral, as you can see. 60, 75, 25 is just about 60, 76. So I'll call that neutral. And if the market accelerates down, then I'm going to look for that zone to be the support level. In the NASDAQ, it's a very similar picture. Lower highs, but higher lows. There's the difference this time. And notice how every time the market has found its support at the 100-day average. So if it were to break down, that's an if, I would look for support from 21,229 to 21,161. That's a fairly narrow range right in there, and you can see it. You're overbought. Even if you take out this high and turn the trend up, I don't see an awful lot of upside because 22,106 is a big resistance number in the upper Bollinger Band. In the E-mini micro Dow, we've got the trend down, and for the moment, the bias down and momentum down. Support, like the other indices, right here at 43,771 to 43,700. The Bollinger Band in black, green, the 100-day average, momentum down. And the Russell is in a downtrend. No, the Russell's the one that's got nothing going here. Higher high, lower low, honing in on the lower Bollinger Band if you were to break through 2236 level. But this market seems to be happy just hanging around right where it's at this point. When we come into the 10-year notes, notice how the market got thrown back by the upper Bollinger Band. That's what I expected. And the market could sink back to this 18-day average. You know, tomorrow as the Fed chair speaks, this market's going to listen to every word that he says. Do I think he'll say anything unique? No. I think he's going to say that labor market is very strong. The economy's in very good place. The Fed's got restrictive rates on it to contain inflation, but inflation is staying stubbornly high, and the Fed's going to just be data dependent. I've given you what I think he's going to say. When we look at the 2-year note, higher high, breaking down. Support could be the lower Bollinger Band, but I don't see a trend in that either. In the dollar index, you suddenly closed back over the 18-day average. So in the short term, the trend has turned back up. You have higher lows on the swing line, a higher high, the bias is up. If it wanted to extend, wherever the upper Bollinger Band would be the resistance, if the market takes out the lows of Friday, wait a minute, what time? Yeah, Friday. I just want to be certain where we're at. Friday's lows, then I think you go to the lower Bollinger Band, 106.82. So at least I understand the parameters that the market has. Eurocurrency's back in a downtrend. Lower highs, lower lows, could be headed to the lower band again at the 102.70 level. The market likes to challenge that number. It missed it on this particular hit. It's made it on all three of these and immediately bounced away, as you can see. British pound rejoined the downtrend today. Now you're back in the lower highs, lower lows. So until the market goes back up and through Friday's high, I say the trend is down and you could be headed back into the 122.16 level. The first thing it probably has to do is fight a battle here for a little bit, which it's trying to do right now. Bitcoin, I don't know if there's a lot left to the downside here. It made its run twice at the lower Bollinger Band, and it's not able to penetrate and get through it. But there's not an uptrend at work. What you have, even if you got a rally right now, you have the lower highs, lower lows. Nothing can break that pattern for the moment. When we come to Brent, I thought that we would get a battleground last week at the 200-day average. It's exactly what the market is doing. Between there and the lower Bollinger Band is the support, but you're very oversold already. I don't think new money deploys when you're really oversold. In bed, it would be one thing. You're not doing that at this point. And take a look what happened here in WTI, and I just want to give you an idea. If you haven't taken my course, you want to. But this was a market, and let's take it from right over here. Both numbers under 20, both under 20, both under 20. This is Thursday, February 6th. Markets got both still staying there. They're still there on the close today, the 10th. But tonight, they're losing that reading. If it stays lost today, then I can make an argument that price and the 18-day average are ready to make a run at each other back to the upside before prices get under this low. That is the theory, at least. When you look at the heating oil market, I see nothing. I see a market that's caught at the 18-day average of closes. And in that gas, I started off by saying a big storm is coming through with cold weather again. You're probably going to get more drain coming out of heat use, which is not bearish for the natural gas storage numbers at this point. The trend is up. The bias is up. I'm not certain it can get back up all the way to 388 because I'm not seeing that type of cold come back where it's zero, but it's under freezing. And that gets an awful lot that you have to pay attention to. If you're thinking of coming to Chicago this week, don't. The snowstorm could be the biggest in 10 years, they're saying, that could hit the city. You heard what I said, biggest in 10 years. Hide. Don't come to Chicago. All right? Not a good spokesman for the city. All right. You know, you see when I talk these technical indicators, and we've put together with our good friends at Modern Trader brochures that we then copied where you can look at them all just as we've done them, volumes 1 and 2 with all the photos and all the explanations, everything we've got. How do you get this? Well, you just go to our website, iraepstein.com, and under free offers, it's right there. What you want to do is take a fast look at volumes 1 and 2. We separate that out so you can get that. You might want to also take a look at seasonal trades. You know, we use SeasonX and the more research. I think you'll find them both pretty interesting. You tie all this together, you start to come up with game plans and understanding what the market traditionally does, when it does it, why it does it, and so on. So how do you get this? Go to iraepstein.com, free offers, and move your cursor to the top here. That'll take care of it for you. I'm Ira. You have yourself a great evening. I'll catch up with everybody tomorrow morning. You take care. And here you go one last time.